Hi, I'm Yosefa Huber.
Ely Cole. We are here today to talk about U.S. and Israel taxes. We're going to run through 20 questions, the most common questions that we get asked as tax professionals, and try to, as we go, give you a big picture of various considerations of U.S. and Israel taxes, in particular while people are living in Israel. To introduce myself, my name is Ely Cole. I'm partner at Cole & Waxman Tax Services. I've been practicing as an accountant in Israel for almost 15 years.
I'm Yosefa Huber. I have a small tax practice for about 7 years now, and I also specialize in international taxes, specifically individual taxes like Form 1040 for U.S. citizens living in Israel. And why are we doing this? This is our second time doing one together. Do we work together? No. Sometimes people ask us that.
But it's I always prefer when we do a webinar, actually do it with Yosefa or do it with another professional. We jokingly said that maybe this presentation should be called Two Accountants, Five Opinions. And that's something we'll be touching upon is we will go through a lot of different topics. Some of them have clear-cut answers. Some of them have answers of depends who you ask. So we're going to try to go through, give you an outline of many considerations. We won't be able to answer every question. Some answers I might give, Yosefa might disagree with, or might have a different opinion approach. So it's just important to know that when you talk about accounting, taxes in Israel in particular, in many cases there are different opinions on things. And so it's important to kind of give you different perspectives on various things.
Yeah, and we do have kind of a community of U.S. accountants in Israel where we ask each other questions because there are so many gray areas. So we do have a network. We're not competition. There's enough work to go around. We have different styles of work and different types of firms. And so it's nice to bounce ideas off of each other. We both respect each other's opinions. So now today you'll get to hear more opinions and more information.
Yosefa.
Yes.
I won't be living or working in the U.S. Why are we talking about U.S. taxes?
Why are we talking about U.S. taxes? So you think you can leave the States, you can cut all your ties, you can get everything out of the States and you're totally done. But as long as you have a passport, I don't care if it's an expired passport, expired green card, as long as you're a U.S. citizen or a U.S. tax resident, as we say, you are going to most likely have to file something to the U.S. every single year. So we're here to talk about that, and you will need to keep in mind your U.S. citizenship no matter what you do, anywhere in the world. The U.S. has what's called citizenship-based taxation, as opposed to most countries that have residency-based taxation. So as long as you're a citizen, the default is that any income is taxable in the U.S. And if it's not taxable, it's at least reportable in most cases, and then you have to show the U.S. why it's not taxable. So I'm filing U.S. taxes. Do I still have to file in Israel?
Unfortunately, the answer is yes. In most cases, as you mentioned, most countries have residence-based taxation systems. Israel is one of those countries. So if you're
a resident,
right, if you're an Israeli living in America, you very likely don't have to file taxes to Israel. However, if you are an Israeli resident, or really what's defined as if Israel is your center of life, and that in most cases it's a black and white situation. You make Aliyah, you leave your home in America, you reestablish your home in Israel. Israel's your center of life. Some people have gray situations, and we examine them more specifics, various tests to consider. But once your center of life is deemed Israel, you are deemed a Israeli resident, and you need to consider Israeli taxes as well. Mm-hmm. Which brings us to, I think, one of the most common questions we get, which is, hold on a second, does that mean I'll be paying double tax? I thought there's no double taxation.
Before we go on, I do want to mention when we talk about residency, a lot of people, and we are going to explain this a little bit further, but we're not talking about the address that you put on your mail. We are talking usually about where you go to sleep at night, where you keep your stuff. That's usually your residency. So we'll discuss it more, but in most cases, you make Aliyah, you're planning to live in Israel. That's your residency, regardless of what address is on any official documents. So there is a tax treaty, and it is not very helpful for U.S. citizens in most cases. There's a section of the tax treaty that says that we call it the savings clause. It says that the U.S. and Israel are allowed to tax their citizens and residents as if there was no treaty. So there are pieces of the treaty we can use. There are pieces of the treaty that are exempt from the savings clause. There's a list of things like, except for XYZ. One of them, we'll talk more about, is Social Security, but for the most part, you can't just open up the treaty and assume that you can use everything in it. You have to read it pretty carefully. But that doesn't mean you're going to be paying double taxes. We have solutions.
So there's no blanket rule. I think this is a big thing. Is people often think it's like, no, there's no double taxation.
Right.
And there's no blanket rule like that. The treaty doesn't say, okay, U.S. citizens living in Israel, you're paying to Israel, don't pay to the U.S. There's no blanket rule. Every type of income, every aspect needs to be looked into. So you were now going to talk about some of the ways to relieve the double taxation.
So as a rule of thumb, for most types of income, not all, but most types of income, you will be taxed one time. You'll be taxed by one country. You might have to report to both countries, but there's not usually double tax. You usually have to pay tax somewhere at least once, no more and no less for most things. So we have a few tools. One of them is called foreign tax credit. So first you pay the country that has the first right to tax that, and that's really important that you pay the right country first, and then you get a credit to the other country. For example, if you're working in Israel, you'll have Israeli taxes withheld from your salary, and you take a credit. You can get a credit for the tax you already paid to Israel. You show the U.S. You report to the U.S. This is how much tax I already paid Israel. Look, it's more than you want to charge me, so I don't owe the U.S. any more money. Another option, typically for most income levels, not you use one or the other, although you can use both in certain situations, but not to overlap, is the foreign earned income exclusion. So that is a simpler way, but not always the best way. And basically with that, you're wiping out your U.S. earned income. You're saying, I am eligible based on a number of criteria, and therefore I don't have to pay tax on the first, it's about $112,000 of income. But you still have to report, so that's really important. And it's also important to consider that that's not always the best way to do things. So, but it is one option. And then another option for certain scenarios, certain very specific items, is the U.S. tax treaty. So we have listed here the forms that are typically filed to disclose those things.
Sure. And then on the Israel side, I'll show you the second one, which is Zikuim credits. It's kind of in line with what Yosefa was referring to with the foreign tax credit on the U.S. side. As you said, it's not that you have to pay double tax. It's that you have to report to both of them and typically pay up to the higher rate between the two countries. So if, let's say, you have dividends from a U.S. brokerage account and the U.S., into the U.S. you have to pay 15% tax, let's say, on those dividends. And Israel says, well, our tax is 25%. You're paid 15% to the U.S. You don't pay an additional 25% to Israel. You get the zikui, or the credit, of the 15% you already paid to America, and you're left with the additional 10%. So you could have cases of paying tax to both countries, but it's only up to the tax rate of the maximum rate between the two. It's not like you'll pay 25 to one and 15 to the other. It's going to be a total of the 25. Where we get in more difficult situations, which we'll get to in a minute, is where one country might give you a big tax break, but the other one doesn't recognize the tax break. Mm-hmm. And that's where you feel like you're getting hit with double taxation, because like we said, Israel has some really nice exemptions they give you. The 10-year exclusion we'll talk about, where when you make Aliyah, when you move to Israel, the first 10 years, you don't have to pay Israel tax on certain types of income. The U.S. is typically still taxing you. Mm-hmm. Additionally, Israel has some tax breaks. For example, certain types of rental income for Israeli rental properties, Israel might say no tax, but America still will tax you. So it almost feels like double taxation, whereas it's really just one country charging zero and the other charging their regular rate.
Yeah, and it's also really important to keep in mind that when you hear something is tax exempt, really listen and check what country are we talking about, because there's typically not an entire type of income that's tax exempt worldwide. If something is written into the U.S. law as tax exempt, for example, deferred or tax deferred, like an IRA, that isn't specifically written into the Israeli law for that specific item. Tuition, scholarship might be tax exempt in Israel, but your scholarship isn't tax exempt necessarily under U.S. law. So just because somebody tells you it's tax exempt doesn't mean you don't have to report it on both places or it's tax exempt everywhere.
Yeah, we see that a lot also with rental properties.
Yes.
Either if it's on the U.S. side, if someone's in real estate and they're trying to do like a 1031 like-kind exchange, saying, well, I'm going to use this U.S. tax vehicle to avoid U.S. tax on selling my rental property. It's very possible that Israel's going to turn around and say, okay, well, we're still taxing you. Or on the flip side, a lot of times people might sell, let's say they have an Israeli rental property, but it meets various rules. Israel might let it be tax exempt. The U.S. might still tax it. So we're especially cautious when one country kind of says tax exempt or big tax break or tax deferred. So the timing might be different. We have to be very careful because the timing could be different to the U.S. and Israel.
Right. Yeah. So for example, in Israel, if you only have one property and you are collecting under a certain amount of rent, you may have no requirement to report that to Israel, and a lot of people assume that means that it's also not reportable in the U.S. because it's minimal, but it doesn't work that way. So if you do, we'll discuss property more in the future. A few other elements where you could have some more tax is self-employment. If you are working freelance independently, what we call in Israel atzma'i, you, in most cases, especially without more tax planning and structuring, the default is that you will be paying about 15% U.S. tax. That's Social Security and Medicare, what we call self-employment tax. You'll be paying that on top of your Israeli taxes.
This is probably, I think, the biggest pain point that we see on a regular basis. Yeah. While certainly selling properties and other things, that's not as common, and people usually have more income in those situations. The atzma'i issue is really a big challenge. You have a lot of times where someone will make Aliyah and their profession just leads to where they're self-employed. They're a therapist or whatever profession where it makes sense to be atzma'i, to be self-employed.
Or they don't get a job in Israel and they just start doing stuff online.
Sure. Or a job. You get a job at a school as a therapist and you say, hey, I can make literally 5 times the amount of money if I go off on my own and be an atzma'i. And there's a lot of opportunities to be an atzma'i, but there's definitely a lot of challenges. The Israel structure has its own challenges, and then on top of that, you get hit with this 15% additional tax and other challenges as well.
Yeah, and as we're going to talk more about later, if you are self-employed, that's going to be an automatic trigger for needing to file Israeli taxes, regardless of the 10-year exclusion, which we'll discuss. You really can't get out of filing Israeli taxes if you're freelancing, if you're sitting in Israel while you're doing the work.
I just want to mention one more thing. Mm-hmm. One thing, though, to consider, the self-employment tax on atzma'im, it's the reason why it exists, right? You're not having double tax. Mm-hmm. It's primarily a social security tax. So it's really more of you have to think of it as paying into a pension almost, because you still will be earning social security credits, and you will potentially and probably have eligibility for some sort of social security benefits down the road. There's a lot to unpack there. The challenge is, at the end of the day, you're moving to Israel, paying a lot of Israeli taxes, and then it's an additional 15%. So it could be a very nice pension down the road, but it's still, you have to pay your bills, and it's not going to help you with that.
So in most cases, it's not going down the drain. It's going into something, but it's something that you don't have as much control over as an IRA or an Israeli pension. And it's a lot of money. It could be a pretty big chunk of money that you really need in your pocket now, especially if you're getting started. One of the last things on the list is PFIC, which is very important to touch upon. So what is a PFIC? PFIC, it stands for Passive Foreign Investment Company. It is typically a fund or a basket. A number of things can fall into the category of PFIC. You can look it up on your own if you want the specific 50% of this and 75% of that. But in general, if it has the word Karen, a fund, or Sal, a basket, watch out, because that could be a PFIC. And why do we care about PFIC? So the U.S., think of a U.S. mutual fund. If you have a mutual fund in the U.S., which is not a PFIC, the F in PFIC stands for foreign, so a U.S. mutual fund would not be a PFIC. And that mutual fund, regardless of if you touch it, you're not touching it, you're not doing anything, your broker automatically is reinvesting everything. It just sits there, you forget about it. They're still reporting annually to you your portion of dividends or capital gains and things like that. And that's according to U.S. law. So when you have something foreign, like something in Israel, Israel doesn't have that law. Anything that is in a fund in Israel, typically the tax is deferred until you actually sell the shares. The U.S. doesn't like that so much. So you open yourself up to some potentially punitive taxation. It's not illegal by any means, but the reporting and the tax can potentially outweigh the gains on that. So it's something to be on your radar and discuss with your accountant.
Yeah, I think a good rule of thumb I always tell people is it's best to avoid a PFIC unless you have a good reason to have a PFIC, and then let's talk. Don't do one without understanding
and
what's
I
going
can't
on.
really think of any reasons in your first 10 years in Israel, if you are within your first 10 years as a new OLED, there probably aren't a lot of good reasons to have a PFIC, but talk to your accountant about your specific situation.
Sure. So that brings us to this 10-year exemption that I mentioned. I'm sure people are like, wait, what's some good news? What is this 10-year exemption?
I'm sure everybody's heard. Most people have heard of the 10-year tax holiday. So what is it? First of all, it's probably one of the most misunderstood points. I think a lot of times people hear what they want to hear, so just like shake out all the stuff that you've heard about it so far. It is not a 10-year exemption from all taxes. You're not tax exempt for everything for 10 years. It has nothing to do with U.S. taxes. You're not getting not nothing, but the U.S. knows nothing about your 10-year tax holiday. The U.S. didn't agree to any 10-year tax holiday. You're still going to have to report everything to the U.S. as usual. And it is only on income that is considered foreign source. And foreign source is where people get a little tripped up. Because, for example, if you have a client outside, but you were sitting, let's say, in Jerusalem, working remotely, that's Jerusalem source income. You're breathing Israeli air while you're doing the work, that's Israel source income. And the same, in most cases, goes for if you're an employee of a foreign company. You're sitting in Israel while you're doing the work. Israel is going to want the first bite to that, regardless of your first 10 years. What is exempt?
So that would be looking at most passive income. So if you have U.S. brokerage account, interest, dividends, capital gains, that's why Yosefa mentioned the first 10 years. Mm-hmm. Another reason not to have a PFIC is in most cases you're better off keeping your money in U.S. brokerage accounts because it's going to be tax-free from Israel. Israel typically taxes most investments at a 25% rate, which is typically higher than what the U.S. is going to tax you at. So in most cases, you are saving tax by only paying the U.S., not also paying Israel. If you have U.S. Rental income, U.S. partnership income, other sort of profits, so any U.S. IRA, pension income, any kind of U.S. passive income, or if you have U.S. earned income for time that you're actually working in the U.S. And I think that the remote working is something important to talk about. I always give the example of if, we both have clients who are Olim Chadashim and they are, let's say, a surgeon for a U.S. hospital and they literally only do work in America. 1 week a month they fly to the U.S., they work in their hospital, 3 weeks a month they're in Israel. I'm not sure what they're doing, but it's not performing surgery for their hospital. So their income could be completely exempt even though they're in Israel for 75% of the time because they're doing all of their work in the U.S. But if you're a computer engineer working from your laptop in a Tel Aviv cafe for a U.S. company who's paying your U.S. bank account, still that is not going to be considered remote. That's still not going to be considered U.S. source of income. It's Israeli source of income because you're doing the work in Israel. Like Yosefa said, it's where are you sleeping, not what address is on your your return. It's where are you staying. And so you really have to look at where you are physically doing the work to determine whether it's exempt or not.
Okay. So if I leave my property, my home in Ohio, and I haven't sold it yet, I'm thinking of selling it, I sell it within my first 10 years, that I don't have to tell Israel about that, right?
Selling the property
Selling
itself?
the property.
So correct, that would be exempt.
Okay. But and then I'm working remotely for my father-in-law in Ohio, and he gives me a W-2. I'm earning wages completely for Ohio-based wages while I'm sitting in Haifa and doing the work. So you're telling me I have to tell Israel about that?
Absolutely. It's no different than if you were working for your father-in-law's company in Ohio. He's paying your Ohio bank account, but you live in California.
Okay.
You have to pay California tax. It's where you actually
So
live.
even if I don't take the money out of Ohio, I never take it to Israel, I still have to tell Israel.
Correct.
Yes.
Where you're physically living.
Okay. Does it have anything to do with where I get the money?
No.
Okay.
No.
I know that too.
And that brings us to a W-2 with the U.S. address. So let's say you're keeping your U.S. job, you get a job for a U.S. employer. You've already explained that you have to pay Israeli tax because you're doing the work physically in Israel. Mm-hmm. So why is my W-2 still showing withholdings for Social Security and Medicare?
Yeah, well, does your employer know that you're working abroad?
Well, I told them. They said it's okay.
Mm-hmm. But they made you use the U.S. address anyway because their payroll just doesn't know how to deal with foreign address.
Correct. They said that their payroll department requires a U.S. address, so I just gave them my parents' address just to put something down.
Okay, please tell me it's not California or New York.
It is California.
Oh, God, why? Okay. One step at a time. So you're going to have to file California taxes. I don't know if you're going to need to pay. You might get a refund. There are a number of factors there, but you are going to see withholding. Your Social Security, Medicare, you can't get out of. You're working for a U.S. person or a U.S. employer, you will be paying Social Security and Medicare.
Is that kind of the same concept as the Atzmai that's
yes,
double
that's
pay?
the same as, the self-employment tax means you're working for yourself, so you pay both portions, the employer and the employee portion. If you're working for a U.S. company or even another U.S. person, between the two of you, between the employer and the employee, it comes out to a total of about 15%. But your state taxes, we need to look at. So California and New York can be a little tricky. I think, do you want to say anything else about that, or should we say they should discuss that?
It's a really technical, tricky point because when payroll is issuing a W-2, for some reason, they can't just check off that you're a foreign resident, and they say, we need a U.S. address. And so you need to find a U.S. address. Often use a parent's, siblings, sometimes a friend's.
Or pay for one in Florida or Hawaii or Texas.
If you happen to use Texas, Nevada, Florida, the common ones where there's no income tax, it makes your life a lot easier because there's no question about paying income tax.
Right.
If you use California, New York, Massachusetts, or one of the other states, but those are the three worst from my experience, the state is going to be expecting you to file an income tax return because their default is, well, we have an address that says your name on it. So in most cases, we get the tax back, we get you out of the tax, but at its best, it's a bureaucratic headache. At its worst, there's been a few cases where the state refuses to refund the money, and so it's definitely a big challenge, something to think about. So if you're going to have a W-2, something to talk about how best to do it.
Let's talk a minute about addresses. So we already said your address is not your residence. You're an Israeli resident, you're living in Israel. So my address should be meaningless for tax law, right? Technically,
you're right.
Technically, yes. But we're not just telling you about tax law. We're trying to help you avoid headaches based on our experience. So there's a lot of aspects where technically something isn't taxable, or technically something is taxable, but maybe we can save you some headache by just not drawing California's attention, or whatever state it is, by not drawing their attention. Payroll typically, and not typically, but in many cases, payroll just doesn't understand interstate or international things. They just, whatever your address is, they assume that's where you're working, and they're withholding taxes for that state. But certain states, if your employer is based in that state, they are going to want a bite of that. Can be a little bit of a gray area, so you do need to speak with your accountant about that. But sometimes you can just save yourself a headache by not having an address there. On the other hand, Israeli mail leaves something to be desired when it comes to reliability. So ultimately, I usually am telling my clients that they should use the address where they can most reliably get mail. Don't use your parents' address if they're not going to be able to give you really clear scans, or your sisters or your sons or daughters. You are going to be able to you need to get your mail. You need to receive it, not crumbled, with a clear scan ideally. So figure out where you can most reliably get your mail. But within that, there are a lot of subtleties depending on if you're expecting refunds or if you're, where you're working and things like that, where sometimes the address, well, technically it doesn't matter, it can save you some headaches.
And mail does come to Israel. Maybe that's a typo. But
it doesn't always come all the way
to Modi'in, I'd say our mail is pretty reliable for the most part. I think people, blame things on it sometimes.
Just this morning, a client sent me a letter that was sent from Austin, Texas, from the IRS in September. And they just got it today.
So they got it.
They did get it eventually.
So with the W-2, you're getting paid by employee. It's pretty straightforward as far as kind of how the taxes go. There's not a lot of flexibility. In other cases, we've talked about sometimes people get paid with the 1099, other structures. So, and we're going to, again, we said we're not going to answer every question in this area. There's a lot of gray area, and also, as far as the time we have for the presentation, we're just kind of trying to give an outline here. But I think we'll just talk for a few minutes about company structure, in particular when somebody has some flexibility. If you're an independent contractor, you have a company in the U.S. that wants to pay you independently, so you have a little more flexibility for things. And I think one big question that we get a lot is, kind of like people love quoting a friend, a neighbor, this thing, hey,
hairdresser.
Someone told me that I open an LLC or I'll register as an S Corp before I make Aliyah, and then I have to pay any tax. Then no tax to Israel, very little tax to the U.S. I think that there's definitely tax saving possibilities. For some people, an S Corp, which I'm not going to get into now, could be a really nice mechanism to reduce tax both in the U.S. and Israel. Opening up an LLC and making certain elections is another tool we can use that can help reduce taxes. But each of these need to be looked at what is your profession, what is your income level. Want to make sure the costs are the costs won't be higher than the benefits.
And the complications and the headache.
Right.
If you just don't want to be dealing with a separate entity or another tax return, or it just might not be for you, even if there's a little bit of tax savings.
Sure, but each of these are things really to talk case by case with an accountant, experienced with this.
Yeah. So just to go back a step before I move on with company structure, I want to clarify that most people in Israel don't actually file an Israeli tax return every year. Technically, you're required to file an Israeli tax return every year, but there's so many exceptions that the average person isn't. So we sort of made it a given that you're going to need to file in Israel. It's not really a given. If you are if you're working remotely for either a U.S. company, any company outside of Israel, if you're working and doing anything where you're bringing in money that is not just from an Israeli employer where the Israeli employer is withholding taxes, you are going to have to file Israeli taxes. And please find an Israeli CPA who specializes in working with OLIM and international taxes. But there are definitely cases where you might not. If you don't have any other income, you just come here, you get an Israeli job, you're within your 10 years of Aliyah, or you have absolutely nothing outside of Israel, you might not need to file taxes where your U.S. taxes are given. You're probably going to be filing some sort of U.S. reporting beyond, Admin and beyond.
And as far as company structures go, though, I've heard also an idea that maybe it could make sense to make an Israeli company.
Yeah. So your default, if you do absolutely nothing else, you come here as an independent contractor working for one or two companies, you get a 1099, or you just have a bunch of clients and who don't even give you a 1099, the default, if you do nothing, is what's called atzma'i, which means independent. And within that, you have osek pator and osek morshe. You can email one of us if you want more resources about that. But in general, that's independent. There's no real structure, just self-employed. And you pay into Bituach Leumi, the Israeli national insurance and health and all your taxes there. But you can also do a couple things if you want to maybe save on For example, you can save on your U.S. self-employment tax if you're not self-employed. How do you be not self-employed? You open a company in Israel. It's called Chevra Ba'am, and like an LTD is Ba'am. And so you can be an employee of a company that you own. But the company is incorporated in Israel or any other country, but usually Israel, because you're living here, you need to report it here. And then you're an employee, and then you don't have self-employment taxes anymore because you're not employed by a U.S. person or a U.S. entity or yourself. Another option is to use what's called an EOR, an employer of record. Also, Nefesh B'Nefesh has other videos about that. And I like that structure because it really depends on how much income you're earning and your sources of income and your expenses. But I think for someone who's coming with just one 1099, it can save you a lot of hassle. So I don't know, you really have to look at a lot of things if you want to look at the bottom line, tax savings and costs, accounting savings. But I think it's one of the simpler things to do. And I think sometimes for a new Olim, simple can be good. So it's something to consider depending on your structure. And I think we can, we can tell you pretty quickly, depending, we can at least point you in the right direction and tell you if it's worth having another conversation about it.
Is the Chevra Ba'am that's expensive?
Oh yes, that's a good point. So part of the reason that people wouldn't incorporate, you might think, why wouldn't I just incorporate? And what do? I fill out a few forms, and then I don't have to pay U.S. Social Security anymore. It's more complicated than that. I typically tell people to budget about 10 times as much for their accounting costs if they're going to be a Ba'am. Obviously, there's a wide range, but it is significantly more expensive. And depending on how you get paid, it can be, and depending on what accountant you use and the number of factors, it can add a level of complexity to moving money around. Okay, so what is this FBAR and FATCA thing I've heard about? And I think my bank does it for me. I signed something at the bank.
So that's very a common misunderstanding by people. FBAR is the main filing requirement. It's in most cases very, very simple. It just needs to be done. It's in most cases your accountant files it for you. If you ask your accountant to file it for you, you can file it for yourself. It's not really a tax document. It's more of a compliance filing. You're just telling the U.S. government how much money you have in all of your financial accounts outside of the U.S. So at the end of the day, it's almost just like a sheet of paper saying, these are my bank account pension
You just got to make sure you include all the accounts. No matter, once you hit the threshold, you must include everything. And then there's another form that may be required. The thresholds are much higher, called Form 80 and 38. That goes with your tax returns. You want to make sure that you check if you need that before you actually file your tax return.
Sure. And I think in general, I think something that people ask the accountants about a lot is just banks. People often think, okay, banks and taxes are more tied than they are in some ways there, but people also a lot of times want to transfer over, let's say you're buying a place in Israel, you want to make a very large transfer of money from the U.S. to Israel. Assuming it's all in cash, transferring money is tax-free.
Not literally cash.
Sure, but assuming there's
not securities.
Right. So you can make a transfer without paying any tax.
Right. It's your money. It's after-tax money. You would pay tax if you're cashing out securities or if you're cashing out pensions. But if you're just moving a certain amount of money from one account to another account, it's your money. You can move it wherever you want. There's no tax on that. However, I do hear a lot that people say, I want to move all my money to Israel. I don't want to have any ties. I don't want to leave anything in the U.S. anymore. And I really think you should think twice about that. First of all, investments, there are a lot more pitfalls and mistakes. The customer service might not be as comfortable for you here. And you have this, if you're a new Oleh, you have a 10-year tax holiday where you could be investing outside of Israel and potentially, in most cases, pay much lower taxes. So I think you do want to think twice before you bring all your investments here. Technically, there are some things that, like a U.S. stocks or U.S. ETFs that maybe technically would only be taxed in the U.S. The banks are not always, they don't always tax it correctly. It could be more of a headache that it's worth, even if technically it's tax-free. And if you're moving over big chunks of money, you need to be prepared to give the bank or the transfer company a lot of information. You're probably going to need an accountant or a lawyer who can sign off on some things.
And a lot of times people are bringing money over because they want to buy a property in Israel. So that's something people ask a lot of questions about is, I'm buying a property in Israel now, what sort of tax do I have to pay on it? So for one thing, it's important to remember there's different types of taxes. A lot of times when people are asking about purchasing property, they're talking about mas rechisha, which is purchase tax, which has nothing to do with Mir Yosefa. We can refer you to great people.
Yeah.
You need an Israeli tax attorney that can advise you, that can advise you with that side of things. What we do consider, though, is if you are buying a property which is going to have income, then we have to consider the income tax, both to Israel and the U.S., which, as we mentioned, each have their own rules. Sometimes they overlap very nicely, and you don't have a big tax burden. Sometimes they don't overlap. So depending on rental income, or if you're selling the property capital gains, there could be tax to the U.S. or Israel. Both of the things we can discuss kind of case by case.
Yeah. How will your Social Security be taxed? So that is great. That actually is in the treaty. There would be no, if you are an Israeli resident, there is no U.S. tax on that under the treaty. We do recommend using a proper treaty disclosure and reporting in a specific way so you don't get a bunch of letters from the IRS, but it's tax exempt, and in Israel it's tax exempt under Israeli tax law. But now, let's say you want to keep contributing to your U.S. IRA, you really need to speak to your U.S. accountant about that. There are a lot of considerations, and you might not be eligible. However, it's not based on where your income necessarily is coming from. Just because you have an Israeli wage doesn't mean you can't contribute, and just because you have a U.S. wage does not mean you can contribute. So please make sure you're speaking to your accountant, who is hopefully a U.S. CPA or EA based in Israel. Should I close all my retirement accounts, though, and bring them here?
Well, so before that, I want to also mention this with the contributions, because you also have to consider the Israel side. If you're working for an Israeli company, Israel mandates much larger pension requirements than the U.S. does. So it's also very possible you won't even have the ability to put that much money aside, because when you are looking at the various pensions that you're putting aside to Israel and all of the taxes, you might not even have that much money to put into U.S.
In many cases, it's not advisable. So, but just, I think the main takeaway here is it is something you need to talk to your accountant about. It's not something that you should just keep doing and not thinking about. And don't just close all your U.S. IRAs and cash them all out. First of all, you could have penalties. Second of all, there's a limit to how much money you can put into these tax advantage plans. You can't just take it all from the U.S. and put it all into pension Israel. Not that we would advise that, but even if we did, you can't. So just leave it alone for a little while. Talk to your accountant. So this is something that I feel rather passionate about. Can I keep using my U.S. accountant? People tell me my U.S. accountant's 50 years experience, or I've been with them for 30 years, or my uncle's doing my taxes, or, oh, I just got married and my father-in-law's an accountant, so he's going to try to do my taxes. In most cases, you should say thanks, but no thanks. In most cases. There are some cases where your U.S. accountant really knows your situation, and maybe you want to hire somebody here, for example, one of us, to consult and make sure that the things like your treaty and things like that are specifically international, your FBAR, are being done correctly. But in most cases, accountants who work in the U.S., who work with people in the U.S., they don't understand international taxes and reporting for people in Israel. It's like a whole different industry. It's a whole different report.
Yeah, I think my favorite question I've gotten multiple times from people is they say, well, if I keep my U.S. accountant, the bill goes on my parents' account, and they pay my bill.
Yes, my parents are paying for it,
so that's why I don't want to switch to you.
The tree is not worth it. It's not worth. You're not. It's
to go back to the beginning. Me and Yosefa we're colleagues. In theory, we're competitors. We're not. Honestly, I'm happy for people to use Yosefa, to use one of the many other professionals besides me and Yosefa that do a wonderful job. There are some US-based accountants that do know how to handle this, but it's very rare. And I always tell people you can send me a copy of your return and I'll tell you kind of what was missed, because without knowing all of the nuances about Israeli pensions, Israeli tax code, various other things, it's very hard for us to, no matter how good the US accountant is, to know how to handle all of the Israeli income unless they really were trained kind of.
And I think it pains us to be how much time and taking people's money to fix these tax returns that are just a mess. Or all the time I get, why is my friend getting a child refund and I'm not getting a refund? Oh, it's because my accountant said that because I'm using the foreign earned income exclusion, I'm not eligible. Well, why are you using the foreign earned income exclusion? You don't have to. So it's just please, please, please. I don't care how cheap or free. I don't care if they're paying you. It's probably not enough. You probably need to hire somebody here.
Sure. And then I think that's the last thing people ask us also is like, do I need one accountant to do both my U.S. and Israeli taxes?
Yeah, that's a common thing I see people all the time. I want one person. And it feels like that would be easier, but practically speaking, I just hear all the time either people are not as happy with the service, and there's so much tax law on both sides. We typically recommend that you have a specialist, a U.S. CPA or EA in Israel who does your U.S. taxes, and an Israeli CPA who specializes in working with Americans or Olim. And ideally, those two people coordinate. They work together. Maybe they're within the same firm. But I found that even in the same firm, I don't know, the service isn't necessarily better. You're not necessarily paying any less. So find accountants who you like. Find a U.S. accountant you like in Israel, Israeli accountant you like in Israel. Hopefully they can coordinate. I just want to say one thing about just a little bit of a pet peeve of mine. Sometimes people think that accountants in Israel are more expensive, especially U.S. accountants in Israel. If you're paying less to your accountant in the U.S., it's because they're not filing everything that needs to be filed. The accountants that actually know about international taxation, the ones in Israel are cheaper by far. So, yeah.
Sure, and I was just saying this is our information as far as the Israeli taxes go. So both me and Yosefa are U.S. accountants, not Israeli accountants. We both have affiliations with many Israeli accountants that we can also put people in touch with. We can give some advice on Israeli taxes as well, so we can kind of handle the situations people need. We both work either as consultations as needed, pre-Aliyah, post-Aliyah, helping people structure things, and then just with the annual tax reports, especially once you get to Israel, have Israeli income, we can handle whatever filings you need.
Absolutely.
Great.
Thank you for your time.